This story comes to us from Eric DUBIN. The cartel huffs and puffs and tries to blow precious metals house down. Eric DUBIN. The following juxtaposition is too comical for words. Silver overtook its Friday same period level and witnessed meaningful accumulations as the London trade proceeded. You want to know what sentiment for precious metals was like before the raid? Silver tells the story very clearly. And of course we have some charts. I know it's hard to see these charts on camera. Here's the first chart. Give you a good look at that one. Here's the second chart. Those were the 24-hour spot silver and 24-hour spot gold charts from Kitco. Silver is a much tighter market than gold and is also much more volatile. From the start of this particular precious metals up leg that began in late January, we have seen silver lag gold. This has been due to a number of factors, including but not limited to fears of global economic downturn crushing silver industrial demand, which I have argued will be dwarfed by replacement investment demand, and later will in fact spike, as well as manufacturers begin to get nervous about investor demand, making it harder to source industrial supply. But now that precious metals bull market reboot is more visible to Western-based momentum chasers, and conventional market world money managers are increasingly aware that central bankers are starting to break things. It's no surprise that catch-up phase of silver relative to gold is ripe and ready. Though the raid that we are witnessing now, silver will take bigger percentage beating. But when we get on the other side of this nonsense, following the completion of the necessary repair time between the gold-silver ratio is going to start falling as silver begins to rise faster in percentage and terms than gold. Naysayers will scoff as they read these words, but within only about a month, the gold-silver ratio is going to start trending in favor of silver in a way that will add further confirmation to those that need further confirmation. That is, this new precious metals bull market is alive and well. The cartel is acting aggressively this week on top of the mountain of paper-based gold issuance into the COMEX market today. They've been shoveling into the short side already for weeks in an effort to slow momentum. Now, what you see today, with traders getting nervous, considering sky-high commercial short positions and an FOMC meeting starting tomorrow, is it any wonder that the cartel is able to get some traction to the downside? All things considered, this piddly raid, but they'll keep pounding throughout the week as the FOMC runs its dog and pony show, otherwise known as determining the interest rate policy. At least we will not be treated to goofy, totally staged introduction sequences this time around, because the FOMC meetings are private, as I discussed on my Facebook page. We're going lower for the time being. The commercial short position levels for gold and silver have reached very high levels by the end of last week, and momentum was sapped enough to execute this week's cartel capping. Craig Hemke at TF Metals Report whimsically tweeted this weekend, $100 downside on gold is certainly doable, but odds are reasonably high that we're not going to sustain that much damage. More importantly, a very strong case can be made that the small amount of time necessary to repair whatever damage cartel dogs inflict will in fact be just the story. This is just noise. Thank you guys. Subscribe, like, enter into my silver giveaway by subscribing for commenting on a video. Thanks a lot.